Hey guys, this is Alec Davis again, local realtor in Orange County. Once again, giving you guys a little more videos, some tips and tricks in real estate for buyers or sellers, depending on where you're at, to kind of give you a better idea on what to expect before you buy or before you sell. Today, we're going to talk about the different types of mortgages and what might be applicable for you. Obviously, everyone would want to put 100% down in the house. A lot of people talk about it's the best investment, but a very small amount of people can do that. Even I can't do that. So when it comes down to it, you're going to get a mortgage. You have to borrow money. But you have to put money down, and the amount of money that gets put down can really be the biggest factor for you if you can afford that house or afford anything at all. It's not going to be a couple of thousand, especially where we're at in California. Homes are worth a lot of money. We're looking at 600,000, $700,000 for some. In some areas, it can be 5, maybe 400,000. But compared to other states where you can buy homes for 100,000 to 200,000, it's a big difference. You're going to have to put a lot more money down, depending on what you qualify for. The best way to do it, that a lot of people, obviously not everyone's going to be able to do that, but would be 20%. Putting down 20% is a lot of money, but it takes out something called private mortgage insurance. And that saves you, depending on how much the house is, it could save you a couple hundred a month every time you pay your mortgage, which can add up to be a big deal. But obviously 20% of, let's say, 500,000 is quite a bit of money, especially if you're going to go higher than that. So anything lower than that, these loans are called conventional. 20%, 10% is also a possibility, but you really should have a good idea of what your credit is and how good it is, your score, your summary, everything else. Lenders are going to be asking you this to get pre-approved. So if you have good credit, you can prove you have money in your bank account, they can quite possibly get you 10%. If you have outstanding credit, and you have a good amount of money in the bank to cover these expenses of the down payment and everything else, you can quite possibly even get 5%. Some other things that you can get to help with your down payment is what's called FHA. Now, this is going to be more towards like a government-style loan. You have to be approved for it, and not all places will give it to you. Most houses you'll be able to do FHA, but not every condominium complex, townhome place is FHA approved. So you can't use FHA everywhere. But if you're approved for it, you can get 3.5% down, which is much more affordable for most people. But keep in mind, the less you put down, the higher your mortgage payment is going to be. So it's a better investment for you if you have the capability to put more money down, because your mortgage payment every month will be less. And sometimes in some situations, it can also help your interest rate, depending on how much you're putting down. It's all about the game and what you can play and what works for you. The last thing that not a lot of people qualify for, depending on income and other situations, some people qualify for 0% down. If you're lucky enough to do that, fantastic. You can basically move in with only the expenses of the purchase, but not the down payment. But keep in mind, there is a lot more to worry about than just the down payment. If you're going to be purchasing a home, keep in mind that if you have 20 grand set aside for a down payment or whatever it is, there is still going to be expenses you have to pay for while you're in escrow. Most people say between 2 and 3% is a pretty average what you're going to pay. You're going to have to pay more than likely your half of the escrow cost, title fees, things like that. So keep it in mind, pull up a mortgage calculator, see which one works the best for you, and hopefully this video kind of helped you out to understand maybe what you can afford in your city or even in California based off these mortgage rates.